Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Chris Vermeulen from the TechnicalTraders.com. Welcome back to the show, Chris.
Hey, thanks for having me, Jim.
Chris, has energy held up a lot longer and a lot stronger than anybody expected?
Yeah, I think so. I think crude oil and natural gas have blown people out of the water. We went from such a bleak outlook during COVID, during the COVID crash there, and seeing this rally in these pricing for natural gas and crude is just unbelievable. And really, they still do. They still have strong charts. Crude oil is oversold. It's at support, making what I think is going to be a run for $88, $89 a barrel. We almost got there already a couple of weeks ago, but the long-term chart is still pointing to dramatically higher pricing. Natural gas is got a lot of volatility, but the long-term chart of natural gas is actually still pointing to another push, potentially up to that $7 or $8 level. So this is a strong sector. We've been seeing energy sector stocks, especially like exploration, gas and oil stocks, do exceptionally well this year. They're one of the leading sectors, and that's because these energies just keep on going up.
Now, President Joe Biden has asked China to produce more oil, and at first I thought, what? And this is the president whose first act was to cancel the XL pipeline that carried Alberta oil to the U.S., But I was doing some research. Canada is the 5th largest oil producer in the world. China is number 7. You never hear about it, though, because they consume all the oil that they produce and then they import more. So you have a president that publicly is against oil and gas, but privately, pump all you can, boys. Do you think there's going to be a shortage? Because there's so many companies now, or I should say institutional investors like universities say they won't get into oil and gas anymore. Does that mean oil and gas exploration is dead and we're going to see $100, $200, $500 a barrel oil because there isn't any new stuff coming online?
I think a scenario like that is quite possible. I mean, we saw, I think, a lot of fear in the energy sector about a year ago and kind of even before that during the whole collapse. And I think there was such a sharp shock and so many companies went under and people, I think, got so scared that we saw exploration just come to a grinding halt and production and all that stuff. And I think they got so scared. Now prices rallied so quickly. Now everybody's kind of debating what to do, and the cost to get involved with everything have gone through the roof. I bet you it costs twice as much to start exploring potentially more than that just to do the same jobs as before. So it's gone from totally everyone's spooked out of the sector. They don't want anything to do with it. So now it's like, holy, everything's on fire. It's had a huge run, but it's gone straight up. Is it going to come straight back down just by the time we wind up the machines and get exploring again? And it's going to cost even more to explore. So it's a really tough game. I mean, that just the way the prices swung for stocks and even commodities across the board in the last year and a half is just enough to, really make things extra difficult to trade and invest, especially for long term, because now it's like, hey, we just had this massive run and now the market's kind of ready for like a correction, and it's tough to get in at these expensive, lofty life levels here.
Mm-hmm. Now, with this attitude, again, I think the Trudeau government is pretty much anti-gas and oil because their natural resources minister is a Greenpeace activist, I think, who scaled the CN Tower to protest oil and gas, so that's not good news for Western Canada. Do you think there's going to be growing resentment if people back east all of a sudden can't get oil and gas for their cars?
Oh, for sure. I mean, it's ridiculous. As soon as you get governments or presidents involved and they've got their ideas of things, like, it makes no sense. Like, to me, the pipeline makes pretty good sense. We're a top producer. It should be going down to the States and getting used on our continent and used around. Yet it's, here we are struggling, paying ridiculous prices for fuel right now. Oil prices are, I wouldn't say they're through the roof, but they're definitely a lot higher than we all anticipated a year and a half ago. And, I could totally see it. I could see us running out in this massive demand, and we go back to $150 per barrel oil. If it can go negative, it can go beyond the highs that we saw years ago, before it comes back down again. So it's going to be a wild ride. This whole inflation of groceries, of fuel and energies and everything that's going on, labor rates. I mean, we're going to see it potentially could carry on for a little while. I think it's going to be extreme for another, at least probably 2 years. The question is, how high are the highs going to go for all of these things before they actually come back down to earth? But it's definitely a really awkward, weird time for businesses to get things going.
Sure. I mean, I got into the workforce in radio in 1975, and that's when Prime Minister Pierre Elliott Trudeau brought in wage and price controls. It kept kind of a handle on wages, but prices are driven by international factors that no local government can really do anything about. And because of that suppression of wages, the average Canadian wage has not gone up since 1975 once you factor inflation in. Thank you, Prime Minister Trudeau, number one.
Wow, yeah.
Yeah. And even wage increases in recent times were limited to the official rate of inflation, but that didn't include the price of housing or energy or taxes. So your 2% pay raise didn't account for the fact that your house costs 20% more.
Mm-hmm. Yeah, it's tough. In Canada, it's probably the same in a lot of places, but here in Canada, like, you cannot get employees. It's almost impossible to get an employee. You've got to pay them pretty much twice as what the rate was before COVID. And I've got a relative who runs a business, and she just can't get staff. And she finally had two that interviewed well. They were all excited to come in, and the very first day, neither of them showed. Never heard from them again. It's just unbelievable. People just don't want to work. They're getting free money from the government, or they're out trying to learn their own thing, become YouTube superstars or something. I don't know, but they do not want to work for somebody. It seems they're all sitting at home, and they refuse to work, even if they get a good rate. So, the mindset and what's going on right now is it's just lucrative. It's very tough for any business to survive, paying these huge salaries, really, for very non-skilled jobs, and businesses can barely survive how it is in most cases. So,
well, the truck driver shortage was predictable because we had all these experts saying AI would be driving our trucks in a year or two. So why invest the time and effort to become an experienced trucker when you pretty well feel, especially if you're doing interprovincial or interstate trucking, where it's relatively easy to have a robot drive that truck? Mm-hmm. So why get into it right now? Because you're going to be laid off in 4 years.
Yep.
We'll have more with Chris Vermeulen right after this.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Chris Vermeulen. Chris, the Dow, as we speak, is up for the day, but the S&P and NASDAQ down. What kind of a trend have we seen in the markets over this year? It seems to me that one sector will be hot and everybody's jumping into it, and then all of a sudden the brakes are slammed on. It's no longer popular, and you have to go into something else like energy or precious metals. Has this been an unusual year that you have to stay on your tippy toes every second of every day, or are you going to be left behind?
Yeah, it's been a really difficult year, I think, for a lot of people. It really depends on your trading style. For example, if you've been long, like the SP 500, which is kind of the ultimate barometer, and or the NASDAQ technology side of things, you've done fairly well. Those indexes are really just kind of been grinding up and up and up to the right, which has been great. But you look at the Dow's struggled a lot. Transportation sector has struggled a lot. The Russell, the small caps have really struggled, and really most sectors are way off the highs from last year. They have been trading sideways, and you get a very strong rally in a sector for a month or two, and then it rolls over and then just collapses again, and then another sector kind of rises for a couple months. But we're not seeing like sectors just, up and to the right and infinity and beyond type of thing. We're really just seeing them rotate. It's been a very high rotational year. Not a lot of new highs made in a lot of sectors. They've been grinding and just churning out here. And so if you're an index trader, you're definitely getting the benefit of the Dow. They've been working up and to the right-hand side, nice corrections. If you're more into sector rotation, this has not been the year for sector rotation. The time will come back when they take off and dramatically outperform the indexes. But this year, it's just been money kind of rotating into one sector and then rotating out and trying to find the next kind of sector. And it's really just been a tough year. So that's how it's kind of been. And we're really just starting to see, as of a couple weeks ago, kind of the whole broad market participating. The S&P 500, NASDAQ have been hitting new highs. And then we saw the mid-cap stocks start to hit new highs. And then the Russell 2000 broke out to new highs. And now we're really just waiting on the transportation sector, which looks primed and ready to break out as well. And this pullback we've seen seems to be a very healthy pullback. It doesn't seem like anything peculiar or anything strange about it. It's just a typical market correction. And if this turns around and starts to rally, the next leg up in this market is going to be like another 8 to 15% rally in the stock indexes, I think. We are primed and ready for a huge move if this is just a small market correction.
So many people are saying that the market's poised to keep doing well into the new year, but do you see a stalling point somewhere in 2022?
I do. I think we could see a really strong run right to almost the end of January, based on cycles and price patterns and how long they've taken to play out to this point. The end of January, to me, is going to be a turning point. After that, I think the markets are going to get into real high volatility, big sell-offs in certain sectors. I think it's going to be quite the struggle, and we'll have to see how that holds out going forward, how that correction takes place, and how we also get up to potentially new highs. If we see the stock market go into an 8 or 15% rally from here up into January, that's going to be very, very similar to kind of like a bit of a parabolic rally. And depending on how participants see things and how different sectors move, if it is a broad market and kind of a euphoric type of move where everyone's chasing small cap stocks and getting into highly leveraged plays, and we see call options go through the roof, meaning everybody's using crazy leverage, expecting higher prices, that to me is going to be a big red flag that when the market does roll over, it could be a huge correction in late January, early February, somewhere in there. So we're coming into pretty volatile times, but I'm hoping we actually have a couple months here of some very solid gains.
Are people getting into utilities? Because no matter what, people need power and water and sewer.
Yeah, we're definitely seeing utilities kind of grind their way up. They're still nowhere near the highs pre-COVID back in February 2020. They're really struggling to get up there, but they're slowly stair-stepping their way up to those levels, and that's one of the reasons why we're seeing the Dow up today and the rest of the stock market is down. We're seeing utilities, we're seeing energy, consumer staples are up, and those are all kind of core things. We all need all those things to survive and keep businesses running. So there's definitely a little bit of flight to kind of safety, defensive sectors, and utilities should bode well if investors and traders remain a little bit nervous, but we do need to see a big explosive move in utilities to the upside to outperform the stock market. And when that happens, that will be kind of a leading indicator that a big market correction is coming. But right now it's just grinding its way up. There's nothing too significant about it.
Precious metals, any interest in them right now?
There was about a week and a half ago, but it has fizzled out very quickly here. more or less, we're starting to see a shift to the upside. Gold and miners and silver have been trending down and to the right, but over the past month and a half, 2 months, they have been making a series of higher lows and higher highs, and that is the definition of an uptrend. And right now, they're actually oversold. As of you and I speaking today, Tuesday, November 23rd, they have got panic selling. They're oversold. They're at support. There's huge volume, which means everyone's panicking out of it right now. And that's usually a sign of a short-term bottom. It should be a reaction low this week, meaning it could bounce very quickly and sharply for a day or two. And then we need to see what's going to happen after that. Is it just a reaction low? It's a bounce and then sells back down? Or is it going to be a standout low on the chart? A month from now, we're going to look back and be like, wow, look at that sharp pullback, that opportunity. So that's what we need to try and gauge. But right now, it's definitely oversold at support. It's looking primed and ready for a couple-day bounce at minimum. And it could be a pretty big bounce in any of those, gold, silver, or miners, because they have pulled back fairly substantially. So we could very easily see, a 5-6% bounce in the gold miners like GDXJ very quickly from this reaction low.
What's happening on the cryptocurrency front?
Crypto, we continue to see it pull back. It came up, made some new highs a couple of weeks ago, and it's been pulling back. It actually has a very similar type of pattern on the short-term daily chart that it put in just before it put in a top last time. So we're going to see how cryptos or Bitcoin recover here over the next 1.5, 2.5 weeks, and we'll be able to get a gauge if this is the start of a little bit more of a correction in Bitcoin and more of a pause. But in the grand scheme of things, it does have some mixed signals. It made a higher high a couple weeks ago, and it made a lower low this week. So it's got a broadening formation, a megaphone pattern kind of, and those that means there's instability. There's increasing volatility because it's making higher highs but lower lows, and it just means it's a higher risk of volatility, meaning when it does break and run in one direction, it's going to move very quickly, and it can do a lot of damage or be very good for your account. So broadening formations are tough to trade because they're giving a false direction in both directions. It's kind of something you want to steer clear of and try and get a gauge on a better pattern as it unfolds more.
Flipping a coin to decide what way you're going to go isn't probably the best investment decision.
No, it's definitely not. I was speaking to a web guy this morning, and he's like, oh yeah, he goes, I got into trading. He says, I was on a couple of groups. I bought a bunch of different crypto coins, and I have some Bitcoin, and he bought a bunch of stocks, all kind of the meme stocks. And it's just funny because it's a younger guy. He's in his 20s. It's just kind of seems like the typical type of play. When you don't know anything, you just kind of follow what you hear online. And he says all of them are down from where he bought them. And that, he would have bought them during the hype when everything was in the news, and you get the fear of missing out, and you get into these. And, that's kind of what a lot of these chart patterns are like. It's like a coin toss. You don't want to just jump into something because you love it. I like to wait for the charts to confirm the pattern and the direction, and then you get on board and ride it higher, or else you end up just literally flipping a coin, and it could be at a really bad time. And if it goes the opposite direction, it's going to hurt pretty bad.
Chris, thank you so much for chatting with us.
Hey, thanks for having me, Jim. Always a pleasure.
My guest has been Chris Vermeulen from thetechnicaltraders.com. If you have any questions for Chris or any of our other guests, you can send them to info@howstreet.com, and we'll ask that question for you. Our popular YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. We're also on Facebook. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.